Welcome back for another technical analysis update on Gevo Inc. I'm Dr.B on Webull and I will be analyzing Gevo chart today, December 14th, before the pre-market. Once again, please remember that I'm not a professional technical analyst or financial advisor, so please do your own due diligence. In the last update, we expected Gevo to break out and reach the 191 level, which it did, very close to 191. It got to 1.95, and also we expected that it would get very strong resistance from the 185 and drop back, which also happened, and it got back to the 185. Please note that even though it closed at 1.8, after hours it pushed a little bit and it got to 1.85, which is the level of the resistance that we were talking about. Before we go into the details of the chart, and before we talk about how the week will look for Gevo, please remember that we will have an event this week in which Dr. Patrick Gruber, the CEO, is participating in the Water Tower Research Fireside Chat series on Tuesday, December 15, 2020. So this is going to be before the market closes at 3 p.m. Although we look into the technicals of the stock, we should be aware that the fundamental catalysts are the ones that moves us from one technical channel to another. So if we get good news on the 15th, it's very possible that we will have a rally that will take us to a new higher and steeper channel. I will, however, go ahead and read the chart as we see it for now, and then see how things will change on the 15th. If we look at the weekly chart, one major observation here is that we broke the super trend just recently in that recent spike, and not even on the spike when we were trading at 1 billion. And also we are trading away from that super trend, which, as I mentioned before, acts as a very strong support and resistance level in the chart. Also, we are bouncing off the 50% Fibonacci level, which is good, but also makes you ask the question, is it going to hold? So if we show the drawings, we will find that this recent rally that we had in the reverse of the trend and going now in a very bullish trend with Gevo, you will notice here that we are sitting at the 50% or bounced off the 50% level of the retracement. All right, so we bounced off of it here, and then we tested that one here again. All right, so that shows that maybe we are going to bounce back up, which is good. At the same time, you ask yourself, like, maybe we are going, it's going to break and we will drop to the 61, and that's why you will find many people on Webull saying that we are going back to 1.38. This is where this is coming from. So as we trade, we keep in mind that it's very possible that we will go and test this eventually at a certain point. All right, the 1.381. It's a possibility. We cannot rule it out. But at the same time, we read the charts, and so far the chart, we can see here there is a push. This is a hammer. If we consider the 185 close, or not close, the push after hours, that is a hammer here. All right, so there is resistance, there is like some kind of rejection here, so that tells you that you are bullish. All right, but you never know what's going to happen, so that keep in mind that even if you go down to that level, it's not bad. It's not something that should trigger panic, try to sell everything. We are still within very reasonable limits, and that would be something that I would test and then try to bounce back off of. Another indicators we can look at are the EMAs, and as we can see here, the EMAs are actually in order, except for the 50 EMA, which is being crossed, and as we are crossing it, this means that we have a bullish trend. All right, so we do not get the bullish trend because we are crossing it. Notice that the EMAs are lagging indicators, so this means that crossing it means that we had enough buying power that actually pushed the price to cross the 50 EMA. This is one thing. The other thing is that even though they are flattening to some extent, so you will notice here that the slope, so that was the slope before, but then it starts to go lower, so that means it's flattening a little bit, so that shows slowing the momentum, but at the same time it's not something that we worry about at this point. In terms of the trend that we have here indicated by the Andrews pitchfork, we will notice here that the recent events were that we pushed all the way up to the 2.87, which is way above the outer resistance of the channel. Then we we got pushed back all the way to the inner resistance of the channel. Then what happens that we started from above the inner resistance, dropped all the way down to the inner support of the channel, and then we got pushed back all the way to the center line. And now we also started from the center line, pushed down, and then we pushed back all the way to the center line again. So we are here in the middle. It's not very clear which direction it's going to, but I would say with that push and rejection and that hammer candle, I would say we would go up, even though it's not guaranteed. Notice that looking at a candle like this doesn't really tell you much. The MACD looks good, but I do not focus on MACD because we already have the information of MACD in the EMAs. All right, notice that the MACD is actually based off the EMAs. The other thing that we can look at is the RSI. The RSI is still cooling down, as we can see. There is a little bit of a slope here, but it's not as steep as this one, which means that there is a possibility of going back up again if we get a rally here. Notice here that in general, if it's above 70, that means or near or above 70, that means it's overbought, and people expect that selling will start, and in this case it starts to cool down. On the other hand, if it's at or below the 30 level, this means it's oversold and buying should come in and push it up again. One thing that people do not really know is that if you have a super bullish trend, your RSI doesn't need to go all the way down to the 30. All right, so that's one thing, at least at the higher time frames. So when we talk about weekly, we should not expect this to drop all the way to 30. Otherwise, that's too bad. This means that we lost all of what we gained over the last trend that we had here. So that's something to keep in mind. It doesn't have, so when you have a bullish or a very strong bullish trend, all right, the bottom of the RSI is not the 30 that people think of. It could be way higher than that, right? It could be somewhere in the 45. It could be in the 50s. So for example, here, if you look at Tesla, so you will notice here that it got all the way down to what, 42.3, and then went back up. So the last time it got to 30 level was in May 2019. So that's what I'm talking about here, that do not expect it to go all the way down to 30 on the weekly chart, for example. But of course, if you look at the lower time frames, it keeps bouncing between 30 and 70, and that's normal. So if you talk about the daily, for example, here, you will notice that there was something here. If you talk about the 4 hours, you will notice that it's more frequently moving towards the 30 and the 70s, and it gets more frequent as you go lower in the time frame. So here's 1 hour, we touched the 30 a couple of times. So even in this case, it's touched, it went back down, and then it's going up again. So it's very possible to go and push towards the 70 again. So enough on the RSI. Let's go back and continue talking about our chart. So if now we can go back to the daily chart. On the daily chart, we can see here that we have our price moving within that channel that we outlined. We are also here seeing that there is, after that drop, we are seeing here that there is some kind of a rise again in what I believe is this new channel. Now, on Thursday, we drew this channel with only 2 candles, which made me not very confident about it. But after seeing the price action on Friday, it's giving me a little bit more confidence in this channel. Not 100%, but it seems to be complying or conforming to the support and resistance levels of this channel. So if you look at this channel, you will notice that we pushed all the way to the inner resistance, and then we got pushed back all the way to the inner support, and then in the after hours we pushed back again to the center line. So we are sitting somewhere here at this point, and then if it continues in this trend line, then that is good. One thing I would like to highlight on the daily chart is that let me remove the EMAs, keep the super trend. So now we are between the super trend line, which is acting as a very strong support, as you can see here with the rejection of low prices, and also the 185, which was a very strong resistance so far, rejecting us multiple times. Now notice one interesting observation here is that the days we are pushing the 1.85, we are actually having higher green volumes. So whenever we push the 185, we have higher volumes. On the other hand, if we are dropping and trying to push in the super trend line, you will notice here that the volume is relatively lower. So that tells me that we are bullish. We are going to break this 185. Now another thing that is supporting the idea that we will likely break the 185 is that if we look at the lower time frames, we will find that we have a very bullish trend. So if I add the EMAs again, you will notice that they are all pointing up, they are getting in order, they are bullish, and with gaining more slope, which means this is a stronger, or the bullish trend is getting stronger. And you will find this on the 2-hour chart as well. And notice here how the 5 EMA is acting as a support in that new channel that we just drew, which is very nice. Again, we plot all of these independently, but it's just a line, so that's good. That tells me this point here is a strong support. If you look at the 1 hour, you will notice again here the same thing. It's acting as support, and we have also again the bullish trend, as you can see here. So if we break the 1.85, where are we heading? That's the question. Given the channel that we have right now, I believe that we will be trading somewhere between 185 and 2.07, and it's very possible that we are going to close below the 1.94, because that is the Fibonacci level, and that will act as a very strong resistance. If not, then we will probably close between the 1.95 and the 2. And if we do that, if we break that Fibonacci level and actually trade or close above it, I'm expecting it to be somewhere at the 1.96 level. So now we talked about what if it broke the 185 and traded higher. I always like to consider the possibility of going down. Even though all the indicators we are reading saying that we are going up tomorrow, I would like also to prepare myself and know what levels I should look at, so I don't get emotional and irrationally do or make decisions that can harm my position and you. So what we can look at here is that we can be dipping between 175 and 184. All right, somewhere between these. If we dip to these levels, don't panic. We are in a very reasonable range. It's just the channel. We are within the channel. So holding this level in the channel, I don't worry about it. We can go back up. If it breaks and holds, like if it stays below that channel, then something is wrong. We need to reassess and make a new plan. But I do not see this happening tomorrow. If it happens, then we will need to talk about what to do next. But at this point, I wouldn't really panic if it drops all the way down to 1.75. Before you hit the back button or look for another video to watch, if you like the contents of this video, please like the video and subscribe to the channel, so this way I can know how many people are interested in watching more videos like this, and it gives me some motivation of creating these videos. Thank you and good luck with your trading.